What if the reason you're losing money in trading has nothing to do with your strategy? You've watched the YouTube videos, you've downloaded the indicators, you've jumped from Forex to crypto to options, chasing the one trade that will finally make it all worth it. But it never does. Why? Because trading isn't just about charts. It's about you, your emotions, your discipline, your mindset. And here's the truth most people won't tell you. The market doesn't care about your dreams. It rewards those who follow the laws, unbreakable principles that govern every successful trader, whether you're sitting in a hedge fund office or trading from your bedroom. This book isn't about giving you another strategy. It's about helping you become the kind of trader who doesn't need 20 strategies, just one edge, one system, one mindset, and the discipline to follow it every single day. If you're tired of losing, not because you're dumb, but because you're undisciplined, emotional, or overwhelmed, this book is for you. Welcome to the Law of Trading. The market doesn't offer second chances, but this book might be yours. Chapter 1. The Game You're Playing. What if I told you most traders aren't really trading? They're gambling, reacting, hoping. They're pressing buttons and praying the market throws them a bone. Sounds harsh, right? But if you've ever found yourself sitting in front of your screen, sweating over a red candle and whispering, "Please go up, just a little," then congratulations, you've already played this game the wrong way. Before you can win, you have to know what game you're playing. Because if you think you're playing chess, but you're actually playing poker, you're gonna lose. Badly. Let's get one thing straight. Trading is not a job. It's not a business in the traditional sense either. It's not even investing. And no, it's definitely not the golden ATM people on TikTok and Instagram are trying to sell you. Just press buy and watch the cash flow in. That's a fantasy wrapped in a screenshot. The market is a game. A brutal, beautiful billion-dollar game of probabilities, psychology, and discipline. And the moment you treat it like anything else, it eats you alive. The casino myth. Here's where most beginners go wrong. They come into trading thinking it's like the casino, except they're smarter. Newsflash, everyone thinks they're smarter, just like everyone thinks they're a good driver until it rains. New traders often have the same vibe as someone walking into a casino with a surefire system to beat the roulette wheel. They've backtested it, their cousin tried it, it even worked once on a demo account. So they go live. Real money, real emotions. They win a bit, then lose, then double down, then get wiped out. And they leave saying, the market is rigged. But the market isn't rigged. It's just smarter than you, unless you respect the game. Trading isn't about being right. It's about being prepared to be wrong and still survive. What this game really is. Let's break it down. Imagine a game where you don't know what the other players are holding. The rules stay the same, but the outcomes don't. You can lose money even if you make a good decision. You can make money even when you're wrong. That's trading. The market doesn't reward IQ. It doesn't care about your education, your job title, or how confident you look on social media. It rewards consistency, discipline, and risk control. It's like poker mixed with chess with a sprinkle of chaos theory and a dash of emotional therapy. And if that sounds overwhelming, good, because this isn't supposed to be easy. It's supposed to be winnable for the few who understand the rules. You're not trading stocks. You're trading behavior. Here's the mind blower. Most of trading has nothing to do with stocks, Forex, or crypto. You're not really trading Bitcoin or Tesla. You're trading people's reactions to Bitcoin and Tesla. Think about that. The market moves not because a chart pattern says so, but because of millions of emotional humans reacting to fear, greed, news, FOMO, and caffeine. Every price movement you see on your screen is a story, a battle between buyers and sellers, between confidence and doubt. And your job is to step back and say, I'm not here to predict, I'm here to react intelligently. That's the shift. Amateurs try to guess what will happen. Professionals prepare for what could happen and profit either way. The illusion of control. One of the hardest pills to swallow is this. You have no control over the market. None. Zero. You can't make it go up. You can't stop it from crashing. You can't will your trade into profit no matter how hard you stare at the screen. Believe me, I've tried. But here's what you can control. When you enter, when you exit, how much you risk, how often you trade, whether you follow your plan. That's the real game. Control the controllables. Surrender the rest. If you're trying to trade for certainty, you're in the wrong arena. This isn't a paycheck. It's not a salary. It's a risk business. And the sooner you get comfortable with uncertainty, the sooner you start to win. Why most people lose? Okay, real talk. Why do 90% of traders lose? Because they come in with the wrong expectations. They think trading will solve their money problems. They think they can flip $100 into $10,000 in a week. They think the market owes them something just because they worked hard studying chart patterns for 2 nights straight. Here's the truth. The market owes you nothing. It's not your boss. It's not your mentor. It's not your supportive friend. It's a mirror. It reflects your strengths, your weaknesses, your self-control or lack of it. It exposes you. That's what makes it so addicting and so brutally honest. Trading feels easy until it isn't. Let's be honest, trading feels easy when you're winning, especially in a bull market when everything goes up. But here's the catch. Everyone feels like a genius in a bull market. You think you're skilled because you bought a coin, it went up 30%, and now you're planning your early retirement. But what you're really doing is riding a wave you didn't create. Then the wave crashes, and suddenly you realize you were never swimming. You were just floating. The real traders, the ones who make it, are the ones who build a boat. They don't rely on the tide. They're ready for the storm, and they survive when everyone else drowns. You can't win if you don't know the rules. Imagine trying to win at basketball without knowing what a foul is, or trying to play Monopoly but making up the rules every turn. That's how most people trade. They don't know the rules of risk, position sizing, leverage, or market structure. They just throw money at the screen and hope for the best. But trading has rules. Not rules like never buy after 2 p.m. or use RSI when it hits 30. Real rules. Rules like only risk what you're willing to lose. The market doesn't care about your opinion. You're not as smart as you think you are. Good trades can lose money. Bad trades can win. Your job is to follow your system, not your emotions. Learn these laws and you have a chance. Ignore them and you're just another donation to the market gods. Everyone pays tuition. Here's something you won't hear from trading influencers on Instagram. Everyone pays tuition. You're going to lose money in the beginning, maybe a lot, and that's okay. Think of it like college. Nobody expects to make money during their first year of medical school, so why do we expect to make consistent profits in the first month of trading? Because social media sold you a lie, a highlight reel, screenshots of $5,000 profits with zero mention of the $20,000 blown the week before. Don't buy it. Pay your dues. Learn the game. Respect the process. Then earn your right to profit. The shift that changes everything. Here's the moment everything changes. When you stop trading to make money and start trading to follow your process. That's when the game becomes winnable. Because the game isn't about chasing profits. It's about managing risk and executing consistently. If you can do that, money becomes a side effect.
Chapter 2. Discipline pays more than strategy. Let's start with something no one likes to admit. You probably already have a strategy that works. You just can't follow it. Ouch. Yeah, but stay with me. Every trader at some point has said these words out loud or silently in their head. If I had just followed my plan, that would have been a winning trade. And the next day, they do the exact same thing again. It's like breaking up with a toxic ex only to text them, "You up?" 2 hours later. Traders do this with the market every single day. Now here's the punchline. The problem isn't your strategy, it's your discipline. If trading were about finding the perfect strategy, there would be a top-secret indicator hidden in some vault in Wall Street, and everyone who finds it would become a billionaire. But that doesn't happen, because trading isn't a puzzle to solve. It's a behavior to master, and that behavior is called discipline. The illusion of the perfect strategy. Let's get this out of the way. There is no perfect strategy. None. Zero. Zilch. No matter how many Fibonacci lines you draw, no matter how sexy your MACD crossover looks, no matter how many YouTube gurus scream, "Buy the dip," the strategy alone won't save you. Why? Because strategies are like gym plans. Everyone has one, and most people abandoned it by Thursday. Not because the plan is broken, but because sticking to it is boring, hard, and doesn't feel good in the moment. People think trading is a technical game, but it's not. It's a mental game, wearing a technical disguise. You can spend 6 months optimizing your entry rules to the second decimal point, but if you break your own rule in the heat of the moment, none of that matters. It's like being a chef with a 5-star recipe and tossing in a spoonful of dish soap because you felt like it. So if you've ever said, "I know what I should have done, but I didn't do it," congratulations, you don't need a better strategy. You need better discipline. Your brain hates discipline. Let's be fair to yourself for a second. You're not undisciplined because you're lazy or dumb. You're undisciplined because your brain is a primitive mess of contradictions. On one hand, it wants safety. On the other, it wants pleasure. It loves instant gratification and hates uncertainty. It fears loss more than it values gain. And worst of all, it always finds a way to justify bad decisions with logic after the fact. You say, "I'll exit when this hits my stop loss." And then, as the trade drops lower, your brain whispers, "Let's just give it a little more room." That voice, that's not discipline. That's survival instinct in a modern world it doesn't understand. It doesn't know this isn't a saber-toothed tiger. It's a red candle. So, if your strategy says close the trade and your emotions say wait, it's a battle. And most traders lose that battle not because they don't know what to do, but because they can't force themselves to do it. That's where discipline comes in. It's the shield you carry into war with your own brain. Discipline is a system, not a feeling. Here's a truth that stings a little bit. You will never feel like being disciplined. No one wakes up pumped to follow rules. Nobody gets excited about closing a losing trade. Nobody posts Instagram stories about all the trades they didn't take. But that's the point. Discipline isn't a motivational speech. It's not something you turn on with coffee and mindset affirmations. It's a system. A system is what saves you when your emotions are trying to sabotage you. It's the checklist that reminds you, no setup, no trade. It's the rule that says only 1% risk per trade, even when your ego is begging you to go all in to win it all back. The best traders aren't the most passionate. They're the most consistent. They're boring on purpose. They remove the drama, they follow a script. And that script, that's discipline in action. The cost of breaking your rules. Let me tell you a story. A trader once made $10,000 in a single trade. He was euphoric, said it was the best day of his life. You know what happened next? He broke every rule he had. He started trading bigger, faster, with more risk. He thought he'd figured it out. 1 week later, his account was down 80%. That trader was me. Yep, I learned the hard way that breaking your rules feels good short-term and destroys you long-term. When you break your own rules, even once, you teach your brain that it's okay, and then it becomes easier next time. And before you know it, you're not trading anymore, you're just reacting. Discipline is like a muscle. The more you train it, the stronger it gets. But skip your reps, and you'll fall back into chaos. Why discipline is your real edge. Everyone talks about edge in trading. Your edge could be a strategy, a time frame, a niche market, but the real edge is the ability to execute your plan perfectly while everyone else loses their minds. When the market is tanking and Twitter is on fire and everyone's shouting, "Buy the dip," or "It's over," your edge is staying calm, sticking to your rules, taking a step back, following your system even when your emotions are screaming at you. Imagine when 100 traders, all using the exact same strategy, only 5 will be profitable. Why? Because only 5 had the discipline to follow it. That's your edge. Not being the smartest, not being the fastest, just being the one who sticks to the script when others panic. Discipline over outcome. Now, here's a mindset shift that will change your entire trading life. Judge your trading by your discipline, not by your results. Most traders judge success by profit. They say, "If I made money, it was a good trade." Wrong. That's outcome bias. A good trade is one where you followed your rules, even if it lost money. A bad trade is one you broke your rules, even if it made money. If you can accept this, you become powerful, because now you're not addicted to outcomes. You're addicted to process, and that process creates real success. Over time, this mindset rewires how you think. You stop chasing wins, you start executing well. You stop fearing losses, you start trusting yourself. And trust, my friend, is what separates the amateurs from the pros. Build habits, not hope. Hope is not a trading strategy, but habit is. The best traders don't hope the market goes their way. They prepare for both outcomes. They know their plan, they know their risk, they know their exits, and they do this every single day, rain or shine, profit or loss. Discipline isn't a one-time choice. It's a habit built from hundreds of tiny decisions. Saying no to that impulsive trade, taking a walk instead of revenge trading, journaling your losses even when it hurts. Do that enough times and something magical happens. You start to change. Trading becomes less emotional, less reactive. You gain clarity, and clarity breeds consistency. What discipline looks like in real life. Discipline is waking up and checking your pre-market routine even on days you don't feel like trading. It's walking away when there's no setup, even when the market looks interesting. It's setting a stop loss and not moving it even if price gets close. It's shutting down your platform after a loss and not jumping back in for a quick scalp. It's saying, "This is the plan," and meaning it. None of this is glamorous, but it's real, and it works. How to train your discipline muscle. Start small, one rule at a time, one habit at a time. Maybe it's journaling every trade for a week. Maybe it's never risking more than 1% per trade. Maybe it's taking only 3 trades per day max. Doesn't matter where you start, what matters is that you commit. The market rewards the consistent, not the clever. You don't need to be a genius, you just need to be unshakable.
Chapter 3. Master the risk, master the game. You don't lose in trading because you're wrong. You lose in trading because you risked too much when you were wrong. Let that sink in. Most people think the secret to trading is being right more often. If I could just win 7 out of 10 trades, I'd be rich. Nope. You can win 3 out of 10 trades and still be profitable if you manage your risk like a surgeon. Risk isn't the fun part of trading. No one posts screenshots of amazing risk management on Twitter. But risk is the part that actually keeps you in the game long enough to learn how to win. It's the seatbelt, the parachute, the fire extinguisher. It's boring until it saves your life. And if you don't master risk, the market will eventually teach it to you the hard way. And spoiler alert, the tuition isn't cheap. Why risk is the real game? Let's say you're a decent trader, not a genius, not a complete clown, just decent. You take setups that make sense, you win a little, you lose a little. Now imagine this. You risk 50% of your account on one trade. It works. You double your money. You're flying high. Champagne, party, vision board time. But then, trade 2 doesn't go your way. Boom, you lose 50%. And guess what? You're right back to where you started.
Actually, no, you're worse than where you started, because now you're mentally wrecked, doubting yourself, and desperately trying to make it back. So what do? You take another oversized trade. You lose again. And that's how most traders go from, "this might be it," to, "I just blew my entire account," in 1 week. This isn't a story about skill, it's a story about risk. Risk management isn't optional. It's not a bonus chapter. It is the game. The 1% rule that saves lives. Here's something almost every professional trader lives by. Never risk more than 1% of your account on a single trade. Why? Because it gives you room to be wrong. It gives you space to breathe. It lets your edge play out over time without putting your entire existence on the line every time you hit the buy button. New traders hate this rule. They say, "But if I risk just 1%, I'll make so little." Exactly. Because you're not supposed to get rich off one trade. You're supposed to build capital slowly while you sharpen your execution and improve your strategy. If you can't make money with a $1,000 account risking 1%, you won't magically get better with $100,000. The numbers change, the emotions get louder, the pressure multiplies. But if you can master risk at a small level, you earn the right to scale up safely. The myth of going all in. Let's talk about the elephant in the room, the all-in trade. The idea that this one thing, if it hits, I'm free. Free from the job you hate, free from bills, free from debt. The fantasy of one trade changing everything is so intoxicating it should come with a warning label. And yet, almost every trader has tried it at some point. Here's how it usually goes. You find a setup, it looks juicy. You say to yourself, "This is the one. I can feel it." So you load the boat. All in. The trade starts moving in your favor. You're glowing. You're already checking Zillow listings for beach houses. And then it reverses. Suddenly, you're refreshing your chart every 3 seconds. Your heart's racing. You're sweating through your shirt. You move your stop. You cancel your stop. You add more to the trade. You pray. You promise God you'll never do this again. Then the account is gone. That wasn't trading, that was emotional gambling with a market that doesn't care about your dreams. Professionals don't go all in. They go in small, consistently. That's why they last. That's why they win. The truth about losing streaks. Here's something no one likes to talk about. You will have losing streaks. Not maybe, not if you're doing it wrong, you will. Even the best traders in the world have them, but what separates the winners from the wiped out is simple. The winners survive their losing streaks. If you're risking 1% per trade and lose 5 trades in a row, you're down 5%. Uncomfortable? Sure, but manageable. You can regroup. Now imagine you're risking 20% per trade. 5 losing trades and your account is dead. That's game over, and you don't get to keep playing if you're out of chips. The name of the game isn't to win every trade. It's to protect your capital during the inevitable cold streaks, so you're still around when your edge finally starts to hit again. Risk has nothing to do with fear and everything to do with respect. Let me say this clearly. Being risk-conscious doesn't make you a coward. It makes you a pro. Too many people think risk management means I'm scared to trade big. But it's not fear. It's respect. Respect for the market, respect for the randomness of short-term outcomes, and most importantly, respect for yourself. You work hard for your capital. It's not just money, it's your time, your energy, your effort. Why treat it like monopoly money? Risk management is self-respect in action. Why small risk equals big freedom? Here's the twist. The smaller your risk per trade, the less emotional each trade becomes. You can think clearly. You can follow your plan. You stop forcing trades. You stop revenge trading. You stop checking your P&L every 30 seconds like it owes you an apology. When each trade doesn't mean everything, you stop needing to be right every time. And when you stop needing to be right, your trading becomes free. That's when you start trading well, because you're no longer trading for validation. You're trading your system, your process, your edge. Small risk doesn't mean small ambition. It means big picture thinking. How the pros think about risk. Want to know what pro traders obsess over? Not how much they can make, but how much they can lose. They don't walk into trades asking, how much profit can I squeeze out of this? They walk in asking, what's the worst-case scenario, and can I survive it? They know that risk isn't about avoiding losses. It's about controlling them, keeping them predictable, keeping them boring. They cut losses fast. They don't move stops. They don't pray. They accept that every trade could lose, and they're okay with it. That's real risk mastery. The real freedom number isn't what you think. Most people think financial freedom in trading comes when you start hitting big wins consistently. Wrong. Freedom actually shows up when you can take a loss and it doesn't shake you. When you lose 1% and shrug it off, when a losing day doesn't send you into an emotional spiral, when a losing week doesn't make you question your identity. That's freedom. Freedom from fear, freedom from overtrading, freedom from chasing, freedom from blowing up your account just to feel something. And all of that begins with one thing: mastering your risk. You don't need to hit home runs. Baseball analogy time. The best hitters in baseball don't try to hit a home run every time, they just try to make solid contact consistently. Same with trading. You don't need to catch the top or the bottom. You don't need a 10R winner every week. You don't need to double your account every month. You just need base hits. Small, consistent profits, controlled losses. Over time, that adds up. Because here's the math no one talks about. If you win 40% of the time with a 2-to-1 reward-to-risk ratio and you only risk 1% per trade, you'll make money. Not fast, not flashy, but real, durable money that compounds over time, and you'll sleep well at night too.
Chapter 4. The Psychology Trap. You think you're losing to the market? You're not. You're losing to yourself. Sounds dramatic? It's not. Because your biggest enemy in trading isn't the chart, it's your brain. That wrinkly 3-pound organ sitting between your ears? It's been evolving for 2 million years, and 0 of those years were spent preparing for candlestick patterns or MetaTrader 4. Your brain is excellent at running from lions, foraging for berries, and avoiding social rejection. But put that same brain in front of a trading screen with flashing numbers, red and green candles, and the thrill of instant gain or loss? Well, now you've got a psychological demolition derby. Welcome to the psychology trap, the part of trading that destroys more accounts than bad indicators, slow Wi-Fi, and scammy YouTube mentors combined. The market is rational. You're not. Let's get one thing straight. The market is not emotional. It doesn't hate you, it's not out to get you, it didn't see your stop loss and reverse out of spite. The market is simply a reflection of billions of decisions made by humans. And guess what drives those decisions? Fear, greed, FOMO, regret, ego, hope. All the greatest hits of human emotion. But here's the catch. While the market itself doesn't care, you do. You bring all your emotional baggage to every single trade. That time you blew your account in 2021? Still in there. That big win last week? Feeding your ego right now. That revenge trade you swore you'd never do again? Yeah, we remember. You're not trading charts. You're trading your internal state. Fear, the master manipulator. Fear in trading is sneaky. It wears 1,000 masks. Sometimes it looks like hesitation. You see the setup. Everything checks out, but your finger freezes. What if I lose? So you don't take the trade. Then it plays out perfectly. And now you're not just fearful, you're angry at yourself. Sometimes fear looks like early exits. You're in profit, but instead of following your take profit level, you chicken out. Close early, lock in those sweet 0.3% gains. You feel smart for 5 seconds until you watch the trade run for another 200 pips without you. Other times, fear goes full costume party and shows up as perfectionism. I'm not ready yet. You keep tweaking your strategy, back-testing it to death, looking for 100% certainty before you ever place a trade. That's not discipline. That's fear in disguise. Here's the irony.
Fear is supposed to protect you, but in trading, it often causes you to sabotage your own success. Greed is the silent assassin. If fear is the wall that holds you back, greed is the gas pedal that crashes the car. Greed doesn't yell, it whispers. Just one more trade. If I double this, I can withdraw and be done for the month. Let it run. No need to close just yet. What if it keeps going? And just like that, a good trade becomes a bad one. A good day becomes a wipeout. A good strategy becomes roulette. The worst part about greed is it often shows up after a win. Winning makes you feel invincible. You start thinking you are the edge, that you've cracked the code, that the market finally respects you. That's when you start increasing your risk, ignoring your plan, over-trading, over-leveraging, taking setups that don't exist. And then, boom, the market reminds you you're not special. Overconfidence is the hidden killer. Confidence is good. It helps you pull the trigger, helps you trust your system. But overconfidence? That's a trap so sneaky, most traders don't even know they've fallen into it until they're broke. You get a few wins in a row. You think, I figured it out. So you tweak your rules, or ignore them completely. You start trading larger. You start journaling, stop reviewing. You start believing you don't need discipline anymore because you've transcended it. And then one trade humbles you. Another trade slaps you. Then you try to make it back quickly. Now your strategy is gone, your edge is gone, and all that's left is raw emotion flailing around in the markets. Confidence without discipline is just arrogance in disguise. The inner voice that lies. Every trader has a voice in their head. No, you're not crazy, you're just human. The voice sounds helpful, logical, even smart. This time's different. Just move your stop a little further, it'll bounce back. If I just increase my lot size, I can recover faster. Don't close now, it's about to reverse. This voice wants you to win, but it's lying to you, based on emotion, not fact. It wants short-term relief over long-term results. It wants dopamine, not discipline. Your job? Don't silence the voice. Observe it. Question it. Don't act on emotion, act on your plan. You don't have to be a robot, but you also don't have to be a victim of every emotional impulse you feel. Why trading feels personal. Ever noticed how a losing trade can ruin your entire day? It's not just the money, it's the identity hit. You start thinking things like, I suck at this. I'll never make it. Why can everyone else win but me? Because unlike most careers, trading is brutally personal. There's no boss to blame, no coworkers to distract you, no customer to annoy you. It's just you versus you. When you lose, it feels like a reflection of your self-worth. But that's a lie. A losing trade is not a losing identity. A red candle does not mean you're not cut out for this. You are not your P&L. This is the psychology trap, thinking every outcome is a definition of your value. It's not. It's just part of the game. The dopamine dilemma. Dopamine is the chemical that drives desire. It's what makes winning feel great, and it's what makes you open the trading app at 2 a.m. just to check. The problem? Trading platforms are designed like slot machines. Flashing colors, sounds, price movements every second, all engineered to keep your brain craving action. But real trading success doesn't come from constant action. It comes from selective action. The best trades are often the ones you don't take. But your brain hates that. It's addicted to activity. That's why traders overtrade, not because they see better setups, but because they're chasing a chemical hit. Want to beat this? Train yourself to celebrate following your rules, not just making money. Didn't trade today because nothing lined up. That's a win. Cut your loss exactly at your stop. That's a win. Walked away after 3 trades even though you felt like trading more. That's a win. Turn discipline into dopamine. That's how you flip the script. Emotions aren't bad. Acting on them is. Let's be honest, you're not going to turn off your emotions. You're not supposed to. Emotions are human. Fear can protect you, greed can motivate you, confidence can carry you. But when they drive your trading decisions, you're not a trader, you're a puppet. You don't need to eliminate emotions, you need to detach from them just enough to not obey them blindly. The market doesn't reward emotional decision makers, it rewards prepared, grounded, rule-following operators. That's what you are, an operator. You run a system, and your job isn't to feel right, it's to act right regardless of what you feel. Your mindset is your equity. Everyone talks about protecting capital, but almost no one talks about protecting mental capital, your patience, confidence, clarity, energy. Every impulsive trade, it drains your mental battery. Every revenge trade, it chips away at your confidence. Every time you break your rules, it weakens your trust in yourself. Eventually, even if you still have money in the account, you're exhausted, burned out, afraid to pull the trigger, overthinking everything, frozen. You don't just need a healthy account, you need a healthy relationship with trading. That starts with self-awareness, with boundaries, with recovery time, with routines. Protect your psychology, and it will protect you.
Chapter 5. Patience is a position. Here's something no one tells new traders. Doing nothing is still doing something. Let that sink in. Staring at your screen, hands off the mouse, waiting for the right setup, that's not wasted time. That's a position, a deliberate choice, a professional mindset. But let's be honest, patience feels like the most unnatural thing in the world when you're sitting in front of candles, jumping like heart monitors. You didn't wake up, brew your coffee, open TradingView, and sit in silence just to wait? And yet, that's exactly what separates traders who make money from those who make excuses. The hardest trade is no trade. There's a special kind of pain that only traders know. Watching the market move without you. You spot a clean setup, but it's not your setup. Doesn't quite match your rules. Still, it looks juicy, tempting. That perfect candle formation, the momentum, the feeling in your gut. Your finger starts to twitch. You hover over the buy button. But then, you stop. You breathe. You do nothing. That, my friend, is one of the most powerful trades you'll ever make. Because the most expensive trades in your career won't be the ones that hit stop loss. It'll be the ones you shouldn't have taken in the first place. The market doesn't pay the impatient. There's something ironic about trading. It offers the fastest way to lose money, but the slowest path to make it sustainably. New traders often approach the market like a casino, fast in, fast out, fast money. Every tick feels like an invitation. Every candle is a call to action. You sit for 10 minutes with no trade and feel like you're missing out on life itself. And yet, that's exactly what separates traders who make money from those who make excuses. Why waiting feels like losing. Let's talk psychology. We're wired for action. Waiting makes us feel weak, passive, like we're not in control. In school, if you sat still too long, you were unproductive. In relationships, if you waited too long to act, someone else made the move. In sports, hesitation often loses the game. So your brain brings that conditioning into trading. If I'm not clicking buttons, I'm falling behind. Wrong. In trading, waiting is control. It's composure. It's power. It's the professional trader sitting at the poker table, folding hand after hand, while the amateurs burn their chips on garbage. You don't lose by waiting. You lose by forcing. The almost trade disease. There's a most dangerous place a trader can live in, the almost zone. It almost looks like my setup. It almost hit my entry criteria. It's almost breaking out. So you convince yourself, close enough. You take the trade, it fails. Then you feel stupid, not because you were wrong, but because you knew better. Those almost trades feel harmless, but they slowly chip away at your edge, your discipline, your confidence. Every time you act on impulse, you weaken your ability to wait.
And without the ability to wait, you can't win long term. Patience isn't passive, it's strategic. People confuse patience with passivity, but patience in trading isn't about sitting around doing nothing. It's about observation, focus, readiness. You're not staring at charts like a zombie. You're watching with purpose. You're tracking price action, measuring momentum, waiting for confluence, watching for confirmation. You're the sniper in the tower, not spraying bullets, but waiting for the perfect shot. Impatience fires fast and misses. Patience pulls the trigger once and lands clean. Most of your edge comes from what you don't do. Think about this for a second. If you only took your best 3 trades this month and skipped the other 27 that were iffy, how would your results look? If you eliminated every trade based on boredom, FOMO, or revenge, what would happen to your account? Most traders don't lose because of bad strategy. They lose because they dilute their edge with low-quality trades. If you treat every setup equally, you kill your own win rate. But if you wait for only the best setups, you amplify your edge. Patience isn't just protection, it's profit. Boredom is the devil. Let's be honest, trading can be boring. Real trading is nothing like YouTube montages with rap music and Lambos. It's a whole lot of staring at screens, sipping coffee, watching candles move in slow motion like a suspense movie with no ending. So what do most traders do with boredom? They trade, they click around, they jump into meh setups just to feel something. This is where accounts die quietly, not in dramatic blow-ups, but in a slow bleed of mediocre decisions made out of boredom. Professional traders respect the boredom. They lean into it, because boredom isn't a problem, it's a filter. It tells you the market isn't ready, and neither are you. Patience is also emotional maturity. Here's a big one. Patience is emotional control in disguise. When you wait for the right setup, you're not just controlling your mouse, you're controlling your urge to act. You're managing your need for instant results. You're resisting the pull of chaos. That's not laziness, that's strength. Most people can't wait, not because they lack skill, but because they lack emotional stamina. They don't want to sit with uncertainty, they want answers now, profits now, results now. But the market doesn't pay people who need it. It pays people who respect it. And respect shows up as patience. Waiting builds confidence. Every time you pass on a bad trade, something powerful happens. You start trusting yourself. You realize you don't have to trade every candle. You realize you can sit on your hands. You realize you have control. And that trust built confidence. Not the loud, cocky kind, the quiet, unshakable kind that says, I don't chase, I wait. And when my setup comes, I act with clarity. That confidence, that's what allows you to scale, to go big, to stay calm in drawdowns, to walk away when needed. Confidence built on patience doesn't crack under pressure. Patience protects your energy. Let's talk about a resource you don't see on your trading dashboard: mental energy. Every trade you take, win or lose, costs you energy. Every emotional spike drains your battery. Every loss, every decision, every chart flip, it all adds up. By being selective, by being patient, you conserve your focus, your energy, your clarity. You don't burn out after 3 hours. You don't spiral after one bad day. You don't make desperate trades at 3 p.m. trying to fix the morning. You trade less and win more. That's not lazy, that's efficient. The waiting game never ends. Here's the thing about patience. It's not something you master once and never worry about again. It's a daily decision, a moment-to-moment muscle. You'll be tested constantly, after a losing streak, after a big win, during slow markets, during fast ones. You'll sit down at your screen and think, maybe I should just take something, anything. And in that moment, the real trader in you steps up and says, not yet. You're not here to chase, you're here to hunt.
Chapter 6. The Law of One Setup. One setup, one market, one plan. Sounds boring, right?
In a world where everyone's chasing the next shiny strategy, downloading every free indicator and flipping through 15 time frames like it's Netflix, the idea of trading one setup sounds limiting. But what if I told you that this boring approach, this focused, simplified, zero-fluff style of trading is exactly how elite traders win? It's not sexy, it's not dramatic, it doesn't make for flashy YouTube thumbnails or viral TikToks, but it's deadly effective. This chapter is about simplicity, mastery, and the secret most traders are too impatient to discover. You only need one setup to build a career. The setup buffet that kills your account. Let's take a walk down memory lane. Think back to when you started trading. What did you do? You started watching videos like Top 5 Scalping Strategies That Print Money. You downloaded every RSI crossover cheat sheet, Bollinger Band system, and magic Fibonacci sequence you could find. You flipped between supply and demand, price action, moving averages, VWAP, Elliott wave, order blocks, astrology, and whatever Karen from Twitter said was guaranteed. And after all that, you were more confused than ever. That's the paradox. The more options you have, the harder it becomes to act decisively. Every candle becomes a question. Every setup becomes a maybe. You're trading with one foot on the gas, the other on the brake. And that's how accounts die. Not from a lack of information, but from too much information with no direction. The power of specialization. Here's a crazy idea. Instead of being kinda okay at 17 strategies, what if you became a surgeon at one? What if you picked a single setup, one market condition, one entry pattern, one playbook move, and mastered it so well you could spot it in your sleep? Would you take fewer trades? Absolutely. Would you be bored sometimes? Definitely. Would you be more profitable over the long term? Without a doubt. Because trading isn't about variety, it's about repeatability. You don't need 15 strategies. You need one that works and the discipline to stick to it. The myth of the perfect setup. Let's clear something up. No setup wins 100% of the time. There is no holy grail, there is no magic candle pattern that turns $500 into $50,000 in 3 trades. Every setup has losses, every edge has drawdowns, every system gets slapped by the market eventually. So why focus on one? Because mastery isn't about finding the perfect setup. It's about understanding your setup inside and out. How it performs in different markets, what conditions filter it, how to manage risk with it, how to size it, how to know when it's not valid. A single setup, deeply understood, becomes your edge. It's not about finding gold. It's about digging deep in one spot until you hit something real. Why more means messier. Traders often think more setups equals more opportunity equals more profit. Nope. More setups equal more decisions. More decisions equal more confusion. More confusion equals hesitation, inconsistency, and emotional trading. And guess what that leads to? You already know. Losses, self-doubt, revenge trading, and eventually rage quitting the market while blaming manipulation. It's not manipulation. It's you trying to juggle 12 strategies like a caffeinated octopus. Less is more, and one is everything. Confidence comes from clarity. Confidence isn't some fluffy self-help concept. It's not something you meditate your way into. Confidence in trading comes from one thing: knowing what the heck you're doing. When you focus on one setup, you build pattern recognition. You know what clean looks like. You know what a fake out smells like. You stop second-guessing every candle. And when you're clear on your setup, you're calm in execution. You're not reacting to the market, you're responding to your rules. That's the difference between amateurs and pros. Amateurs need to feel certain to act. Pros act because they've seen it before, 1,000 times. Freedom through repetition. Let's flip the script. People think trading one setup is limiting, but in reality, it's liberating. Because once you've locked in your setup, you don't have to reinvent the wheel every morning. You don't wake up asking, which system should I use today? You wake up asking, did my setup form today? And if the answer is no, you don't trade. Simple. You stop forcing it. You stop over-trading. You stop emotionally hijacking your own account. This is freedom. Not the freedom to do whatever you want, but the freedom from the chaos of too many choices. The setup that fits you. Now, don't get it twisted. I'm not saying my setup is the best setup. I'm saying your best setup is the one you resonate with. It fits your personality, your schedule, your risk tolerance. Maybe you like clean price action reversals off support. Maybe you're a trend follower with a breakout bias. Maybe you scalp news. Maybe you swing trade with structure zones. The setup isn't what matters, your relationship with it does. When it fits, you'll know. It'll click. It'll feel natural. And when it does, double down. Get obsessed. Backtest it. Live trade it. Journal it. Refine it. Make it yours. The difference between discipline and strategy hopping. Every losing streak is a fork in the road. Option A, blame the market. Abandon your setup, try a new one. Repeat forever. Option B, review the trades, check your rules, accept variance, stay the course. Guess which one builds consistency? It's easy to blame your setup when things go wrong, but often it's not the setup. It's you misusing it, overtrading it, trading it in bad conditions, ignoring the rules. The answer isn't always try something new. Sometimes the answer is do what works better. Discipline isn't rigid, it's smart repetition. How the pros trade one setup. Want to know a secret? Many full-time traders you admire, the ones making 6 or 7 figures a year, trade one setup. Seriously. They have a play, they know when it shows up, they execute, they manage it, they walk away. They don't need 5 trades a day, they don't need 300 pips, they just need one clean A+ setup, and they size it like a pro. That's the goal. Not just finding your setup, but becoming so good at it you don't need anything else. The one setup, many markets hack. Here's where it gets fun. Once you master your setup on one market, you can start applying it to others. Same setup, different instruments. You might start with EU/USD. Then you realize the same pattern forms on gold, then US 30, then NASDAQ, then crypto. You're not learning new setups. You're applying your one edge across multiple environments. That's how you scale, without sacrificing simplicity. You're not boring, you're dangerous. People will call you boring. You only trade that one thing? You're missing so many moves. You should try this new breakout scalp method I saw on TikTok. Smile, nod, don't take the bait. Because when you master one setup, you're not boring, you're dangerous.
You've stopped guessing. You've stopped gambling. You've started executing with precision. You're not trying to impress anyone. You're not trying to be right all the time. You're trying to get paid. And in this business, boring traders make the most money.
Chapter 7. Never trade to fix your emotions. Let's start with a brutally honest truth. The market is not your therapist. And your trading account? That's not a punching bag, a hug, or a form of self-validation. But most traders, especially new ones, treat it like one. Got a fight with your girlfriend? Let's hit the charts. Bored out of your mind on a Sunday night? Time to scalp Euro USD. Feeling like a genius after 2 green days? Let's risk half the account and go for it. Had a terrible day at your 9-to-5 job? I deserve a win. Sound familiar? Yeah, you're not alone. This chapter is about one of the most destructive patterns in trading, using the markets to manage your emotions instead of your capital. Because when you trade to fix a feeling, the market will humble you, fast and hard. Trading is not emotional therapy. Let's break it down. You're not trading price. You're trading pain. You're not risking money. You're risking your mood. You're not following your plan. You're trying to feel better. But here's the twist. The market doesn't care about your feelings. It doesn't care if you're sad, angry, lonely, or riding an emotional high. In fact, the market loves emotional traders because they donate money regularly and emotionally. This isn't about being cold and robotic. You're human. You'll feel things. That's fine. But when those emotions start deciding your trades, you're no longer in the business of trading. You're in the business of emotional gambling. Boredom is the silent account killer. Let's talk about boredom, the sneakiest villain in your entire trading journey. You've done your analysis, no valid setups, charts are quiet, but you've got caffeine in your system, 2 monitors glowing, and 0 self-control. So what do? You take a trade that's close enough. You justify it. You label it as a small risk idea or just for fun. And deep down, you know it's garbage. You're not trading your edge, you're trading your itch to feel alive. And it feels good for like 30 seconds. Then the trade turns red. You panic close it. Or worse, you double down, trying to fix the loss you didn't even need to take. Welcome to the boredom loop. Feel bored, trade emotionally, lose money, feel worse, try to fix it, blow account, feel like a failure. Want to break it? Learn to respect boredom. Learn to see it as a signal that doing nothing is the right move. Learn to sit with stillness without forcing the market to entertain you like Netflix. Anger trading, aka revenge mode. You've been there. You lose a trade, maybe a stupid one, maybe just bad luck. You feel the heat in your chest. The ego flares up. Your brain starts whispering, "We're getting this back right now." So you rush into the next trade. Double the size, half the logic. You're not trading, you're fighting. Swinging wildly, clicking like it's a boxing match between you and the chart. That's not discipline. That's emotional warfare with yourself. Here's what most traders forget. The market doesn't owe you anything. It doesn't know what it just did to you. It doesn't feel bad for stopping you out. It didn't cheat you. The market is like nature, emotionless, neutral, and uninterested in your little drama. Trading out of anger is like drunk texting your ex. It feels powerful in the moment and incredibly stupid 5 minutes later. The ego inflation trap. Now let's look at the other side of the coin. Winning. Yes, even winning can mess with your emotions, if you let it. You catch a big move, nailed the entry, perfect exit.
You're feeling unstoppable. You're the wolf of your living room. Then the voice kicks in. I'm actually kind of a genius. Let me increase my risk and strike again. Spoiler, you take a bad trade next. Maybe two. Now you're negative. Now you're spiraling. And now you're not just losing money, you're trying to win back your identity. This is the ego trap. When your sense of self-worth is tied to whether your last trade was green or red. And guess what? That makes you fragile. Because markets are chaotic. You can do everything right and still lose. And if a red trade makes you feel like a failure, you're no longer trading the chart, you're trading for emotional safety. That's not sustainable. That's self-destruction. Emotional trading is expensive therapy. Let's do a quick cost analysis. Therapist, $150 per hour. Emotional trading session could cost you your entire account and still doesn't heal you. Using trading to fix your emotions is like using gasoline to put out a fire. It might feel satisfying for a second, but it always leads to a bigger explosion. If you're upset, walk, journal, scream into a pillow, meditate, hit the gym. But do not open your broker app as a way to fix how you feel. The market is a battlefield, not a spa. If you come to it emotionally unstable, it won't heal you. It'll expose you. The two jobs of a trader. Most people think a trader has one job, analyze and execute. But in reality, a trader has two jobs. One, protect capital. Two, protect emotional neutrality. If you protect your emotional state, your capital tends to survive. If you protect your capital, your emotional state doesn't get wrecked. But the minute you start using trading as a way to escape or cope, you abandon both. You don't need to be emotionless. You need to be emotionally aware. You need to know when your finger's on the mouse because of pain, not because of logic. This is why journaling matters, not just to track trades, but to track your headspace, your triggers, your mistakes, your patterns. You can't control the market, but you can control how you show up to it. The relationship analogy. Think of trading like a relationship. Imagine you're dating someone, but every time you're sad, you demand they make you feel better immediately. Every time you feel lonely, you call them. Every time you feel angry, you take it out on them. Every time you feel insecure, you expect them to fix it. How long do you think that relationship will last? That's exactly what most traders do with the market. They expect it to be therapist, savior, cheerleader, and ATM all at once. And when it doesn't comply, they spiral. But here's the grown-up version of trading. You don't come to the market to feel better. You come to the market to execute a plan, period. Everything else, your need to feel smart, validated, or in control. That's your personal work, off the charts, on your time. Learning to pause. You don't need to fix every emotion instantly. You don't need to trade your way back into feeling calm. Sometimes the smartest thing you can do is close the laptop. Go outside, feel the sun, drink some water, watch an episode of something stupid and laugh. Let your nervous system reset. Then come back. Clear, clean, objective. A calm trader is a dangerous trader, not because they're smarter, but because they're stable. Stability is your edge. Chaos is your cost. How professionals manage emotions. Professional traders aren't emotionless. They just don't let their emotions drive their decisions. They have systems, not just for trading, but for emotional recovery. They journal their thoughts. They take breaks after losses. They step away when tilted. They process wins without inflating their ego. They prepare mentally as much as they do technically. They know that trading isn't about fighting emotions.
It's about building systems that protect them from becoming impulsive. You don't need to be emotionless. You need to be emotionally aware. You need to know when your finger's on the mouse because of pain, not because of logic. This is why journaling matters, not just to track trades, but to track your headspace, your triggers, your mistakes, your patterns. You can't control the market, but you can control how you show up to it. The real reason this chapter matters. If you learn nothing else from this book, learn this. You will not become a consistently profitable trader if you continue to trade from emotion. It doesn't matter how good your setup is. It doesn't matter how perfect your strategy is. If you trade from boredom, anger, fear, revenge, or ego, you will lose. Period. Not because the market is unfair, but because you're trying to use trading to heal something that can't be healed on a chart. The market is a mirror. It reflects what's inside you. If you bring desperation, it shows you chaos. If you
Chapter 8. Backtest or blow up. Let me say it plainly. If you haven't tested your strategy, you're not a trader. You're a well-dressed gambler with a Wi-Fi connection. Let that marinate for a second. See, most people don't trade. They wing it. They guess. They feel the market. They use strategies they saw in a random YouTube video with 12,000 views and zero credibility. And then they wonder why they keep blowing up accounts. Trading without backtesting is like flying a plane you built from YouTube tutorials while passengers are on board. You might make it to the runway, but odds are you'll crash spectacularly. Backtesting isn't optional. It's survival. It's your seatbelt, your map, your flashlight in the chaos. And in this chapter, we're going to show you why. Most traders are just guessing. Be honest, how many times have you taken a trade just because the candle looked nice? The trend was up. You saw someone on X.com post a similar trade with a flexing emoji. Exactly. Now let me ask you this. Do you know your setup's win rate? Do you know how it performs in choppy markets? Do you know the average risk to reward over 100 trades? Do you know your average drawdown? If you don't, you're flying blind. You're basing real money decisions on vibes. You wouldn't marry someone based on a few Instagram pictures, so why are you committing your money to a strategy you barely understand? What backtesting really is. Backtesting isn't just running numbers in a spreadsheet. It's not some boring ritual reserved for nerds with thick glasses and zero social life. Backtesting is how you get proof. Proof that your system works. Proof that your edge is real. Proof that you're not just lucky, you're consistent. It gives you data, and data kills doubt. It gives you the conviction to stick with your plan during losing streaks. It helps you know when to stop trading, when to size up, when to walk away. Without backtesting, your strategy is a theory. With backtesting, it becomes a weapon. Why most traders avoid it? You know why most traders don't backtest? Because it's not sexy. It doesn't feel fast. There's no dopamine rush. It's slow. It takes work. It requires sitting down, going candle by candle, writing down trades, reviewing screenshots. You don't get to post a backtest on Instagram with a Lambo and a fake Rolex. But guess what? The traders who do backtest, they're the ones who actually get to afford the Rolex. Trading is a game of probabilities, not certainty. Here's where most people get wrecked. They want certainty. They want every trade to work. They think if they just study enough, they'll get to a point where they never lose. Spoiler, you'll always lose trades. Always.
You can be the best trader in the world and still lose 40% of your trades. And that's normal. What separates pros from amateurs is this. Pros know their numbers. They know their edge wins 60% of the time. They know their system has a 1 to 2.5 average risk to reward. They've tested it over 300 trades. So when they lose 2 trades in a row, they don't panic. They don't question everything. They don't blow up. They say, that's variance. My data supports this. Let's keep going. Amateurs? One red day, and they start tweaking their entire strategy like mad scientists hopped up on Red Bull and regret. Backtesting builds belief. One of the biggest struggles in trading is doubt. You doubt your entries. You doubt your edge. You doubt yourself. But doubt vanishes when evidence enters the chat. When you've tested your setup over 100+ trades, when you've seen it work, when you know the rules and have proof that they produce results, everything changes. Your mindset shifts from, I hope this works, to, I know this works. That shift is everything. Because trading isn't about confidence, it's about conviction. And conviction comes from data, not hope. Real talk. Backtesting is boring, but it's the most profitable boring thing you'll ever do. Look, I get it. Going through 100 charts on TradingView isn't thrilling. You won't get goosebumps from marking support and resistance zones from 3 years ago. But here's the thing. Backtesting trains your eyes, your discipline, your patience. It builds pattern recognition. Soon your brain starts spotting setups faster, cleaner. You don't hesitate. You've seen this before. You've practiced it. You've lived it. That boring routine, it's making you dangerous. It's building the foundation of a trader who doesn't flinch when things go wrong. Most blowups are preventable if you just tested first. You know what most blown accounts have in common? The trader was using a strategy they didn't fully understand. They were trying something new. They skipped testing. They went live immediately. Maybe it worked for a few trades. Maybe it felt promising. Then, boom, the market shifted and the account evaporated faster than trust on a first date with someone who says, I'm an entrepreneur, but lives in their mom's basement. And they'll say, the market is rigged. No, the strategy was untested. The risk was random. The plan was non-existent. Backtest first or blow up later. It's really that simple. How to start backtesting without losing your mind. You don't need a PhD in statistics or a Bloomberg terminal to backtest. Open TradingView, pick your pair, pick your time frame, scroll back 12 months, and start going candle by candle. Look for your setup. Mark where you would have entered, exited, and what the result would have been. Track your win rate. Track your R to R. Track how many almost trades you skipped. Do this over 50 to 100 trades. You'll be shocked how much clarity you gain. Suddenly, you understand your edge. You see what makes it valid, what conditions kill it, when it shines, when to walk away. You're no longer trading in the dark. You're running a professional operation. Because real traders don't just trade. They measure, they adjust, they evolve. The market doesn't owe you trust. You earn it with data. Most traders walk into the market expecting to win. But here's the truth. The market doesn't trust you, and it shouldn't. You haven't earned that trust. You haven't proven you know what you're doing. You haven't tested your system. You haven't logged your mistakes. You're like a rookie showing up to a Formula One race with a car you built in your garage using IKEA instructions. And then you wonder why you keep spinning out. The market respects preparation. It rewards testing. It pays the trader who's already seen the scenario 100 times before and knows exactly what to do. Backtest or blow up. The law is unforgiving. Let's not sugarcoat it. If you skip backtesting, you will lose. You will make the same mistakes over and over. You will waste time, energy, and money. You will build bad habits. You will break your confidence. And when you finally wake up, you'll wish you had tested first. But if you choose to do the work, if you build the spreadsheet, if you log the trades, if you track the patterns, you'll move from chaos to clarity, from guessing to knowing, from hope to precision. You'll trade like a professional, not a gambler.
Chapter 9. Losing is part of winning. Let's kick things off with a truth bomb. You will lose. A lot. And that's okay. In fact, losing isn't just okay, it's essential. It's part of the game. The market doesn't care if you win every time. It's chaotic, unpredictable, and utterly indifferent to your feelings. But you, my friend, can learn from losing and turn it into your biggest advantage. Trading is the only profession I know where losing is expected. Yet so many traders act like losses are a personal betrayal. Like their trading account is a fragile little pet they have to coddle and protect at all costs. Here's the reality check. You're not paid to be right. You're paid to manage being wrong. If you can master that, you're already ahead of 90% of traders. Why losing feels so damn bad? Losing hurts because our brains are wired for survival, not spreadsheets. When you lose money, it triggers the same fight-or-flight chemicals as if you were being chased by a lion. Your amygdala, the emotional brain, kicks in and screams, "Danger, danger! Your hard-earned cash is disappearing." It's not rational, it's primal. So when you take a loss, it feels like a punch in the gut, a slap in the face, or the worst Tinder rejection ever. Your ego shatters. You start questioning your intelligence, your strategy, even your life choices. But that pain, that's part of the process. If it didn't hurt, you wouldn't care. And if you didn't care, you wouldn't improve. Normalizing losses. Let's start with the good news. Losses are normal. In fact, if you're not losing, you're probably not trading enough. A profitable trader's journal looks a lot like a battle log, a mix of wins, losses, and draws. The key is not avoiding losses, but managing them, keeping them small, controlled, and unemotional. Think about it this way. Every loss is like a tuition payment for your trading education. Painful? Sure, but valuable. The traders who get stuck in loss denial tend to chase losses, hold losers hoping for a miracle, and blow up their accounts trying to avoid the discomfort. If you want to succeed, you need to embrace losses like a necessary step on your journey, not a sign that you should quit. Stop revenge trading. Seriously. Here's a phrase that should be tattooed on every trader's wrist. Don't trade to fix your last trade. Losing triggers anger. Anger triggers revenge trading. Revenge trading triggers account destruction. It's a downward spiral faster than a roller coaster with no brakes. You take a bad loss. Your brain screams, "Get it back now." So you double down, take more risk, ignore your rules, and bam, another loss. The cycle repeats. The cure? Step back, breathe, close the screen. Don't trade your feelings. Trade your plan. Remember, a loss is a loss. Trying to win it back quickly usually costs you more. Using losing as leverage. Losing can be your greatest teacher, if you let it. Every red trade offers clues. Did you enter too early? Was your stop too tight? Did you ignore market conditions? Did you break your own rules? Analyze every loss like a detective on a crime show. What happened? Why? How can you improve?
If you do this consistently, your losing trades stop being scary monsters and become valuable feedback. Suddenly, losses aren't just setbacks, they're setups for better trades. The paradox of losses. Here's the weird truth. Traders who accept losing often win more. Sounds counterintuitive, right? But think about it. If you're terrified of losing, you'll either avoid taking trades or hold on too long hoping to avoid the pain. Both behaviors lead to suboptimal decisions. But if you accept that losses will happen and are part of the process, you can make clearer, more objective choices. You can cut losers early. You can stick to your plan without hesitation. You stop fighting the market and start dancing with it. Reframe losing from failure to progress. Most people see losing as failure. That's a mindset that kills progress. Instead, try this reframe. Every loss is a step forward. If you lose a trade but learn something, how to improve your entry, how to manage risk, how to avoid a bad setup, that loss wasn't a failure. It was a success. The best traders don't avoid losses. They accept them gracefully, extract the lesson, and move on. This mindset is your competitive advantage. Laugh at your losses. Yes, really. Humor is a powerful tool in trading psychology. When a trade goes against you, don't cry in a corner or rage tweet the market gods. Laugh. Laugh at your mistakes. Laugh at your stubbornness. Laugh at the market's absurdity. This might sound weird, but humor creates emotional distance. It lets you see losses as part of the game, not as personal attacks. And emotional distance breeds rational decision-making. The "it's just a trade" mantra. One of the simplest yet most effective tools I teach traders is the mantra, "it's just a trade." Repeat it, write it down, meditate on it. No single trade will make you rich. No single trade will ruin you if you manage risk. When you treat every trade like one piece of a giant puzzle, the pressure lifts. You stop needing to be right every time. You stop clinging to losers. You start trading for the long game. The power of small losses. Small losses are like mosquito bites, annoying but survivable. The goal is to keep losses small and let winners run. If you risk 1% per trade, a string of 5 losses only costs 5%. Manageable. If you risk 10% per trade, one loss can feel like a heart attack. Small losses mean you can stay in the game longer, and the market always rewards those who last. Remember, survival beats heroics every time. Why everyone loses more than they think. Here's a secret. Even the best traders lose more than you think. They just lose small and manage those losses like pros. Trading isn't about being right 90% of the time. It's about making more on winners than you lose on losers. That's it. Stop chasing perfection. Focus on risk management. Focus on cutting losses. Focus on letting winners run. Create your loss recovery plan. Part of managing losses is having a plan for when they happen. Do you take a break? Review your trades? Cut risk? Talk to a mentor? Do some push-ups to get your blood flowing? Having a plan means you don't react emotionally. You respond strategically. You turn setbacks into setups for success. Learn from legends, losing big and bouncing back. Even legends lose. Take Warren Buffett. He lost billions during the 2008 financial crisis. Did he quit? No. He learned, adapted, and kept going. Or Jesse Livermore, a trading god who went bankrupt several times but kept coming back. Losing is part of the journey. It's not the end. It's how you respond that defines your future.
Chapter 10. Consistency is the Holy Grail. If you asked most beginner traders what they want, the answer would be pretty simple. To win big, fast. They dream of lightning-fast accounts, turning $1,000 into $100,000 overnight.
They want the glory, the flex, the headline-worthy story. And that's why so many crash and burn, because trading is not about fireworks, it's about marathons. Consistency is the holy grail of trading. Not perfection, not genius, not the latest secret indicator, just consistent execution. Why we chase perfection and why it's a trap. Humans are wired to chase perfection. We want the perfect entry, the perfect exit, the perfect setup. We scour forums and YouTube for holy grail systems that never fail. Here's the problem. Perfection doesn't exist in trading. Markets are chaotic, unpredictable, and influenced by a billion factors. Geopolitical news, central bank decisions, tweets from celebrities, even the phases of the moon. Okay, maybe not that last one, but you get the point. Trying to be perfect is like trying to catch a greased pig at a county fair. Exhausting, frustrating, and ultimately pointless. This pursuit of perfection leads to overtrading, analysis paralysis, and massive frustration. Consistency, the slow and steady winner. The truth is, the most successful traders don't need to be right all the time. They don't need to catch every big move. What they need is to show up every day and execute their plan, no matter how boring it feels. Consistency means sticking to your rules, even when you're bored, tired, or itching to take a quick risk. It means risking the same percentage per trade, taking setups only when they meet your criteria, and cutting losses early. It means showing patience and humility, knowing that trading is a game of inches, not yards. How consistency builds wealth, not luck. Imagine you deposit $10,000 in an account. If you could grow it 1% every day, consistently, what happens? After a month, you're not at $10,100, you're in around $13,400 thanks to compounding. After a year? Well, buckle up. That's over $360,000. Now imagine if you only grew 5% one day, then blew 20% the next. Your account would be a roller coaster, and chances are you'd quit before you got to the $1 million mark. Consistency is the secret sauce to compound growth, the only way to turn small edges into massive wealth. The discipline to be consistent. Discipline is the muscle that powers consistency. It's easy to be disciplined when you're winning. The hard part is being disciplined when you're losing, bored, or scared. The temptation to chase every shiny setup, to go big after a loss, or to ignore your rules when the market looks too good to pass up is strong. But remember, discipline isn't about being perfect. It's about coming back to your rules every single time, even when you want to throw your computer out the window. Consistency versus perfection, a funny story. Let me tell you a story about two traders, Tim and Jerry. Tim is obsessed with perfection. He spends hours tweaking his indicators, hunting for the perfect entry. He waits for the market to be just right. When he finally trades, it's a flawless setup. But those setups come once a month. Jerry, on the other hand, he's not perfect. Sometimes he enters early, sometimes late. He misses some trades, but he trades his plan every day. He manages risk. He cuts losses fast. Guess who's richer after 6 months? Jerry by a mile, because consistent progress beats occasional brilliance. The role of routine in consistency. Consistency loves routine. Top traders don't trade when they feel like it. They have routines. They analyze the market every morning. They plan their trades. They review their journal daily. They have set rules for entry, exit, and risk. Routines remove emotion from decision-making. They automate good habits. They keep you steady when the market is chaotic. If you want to be consistent, build routines that support your trading plan. Dealing with the boring parts. Let's be honest, consistency is boring. It's not sexy. It doesn't make for viral TikToks.
But boring is powerful. Trading boring setups, managing risk carefully, taking small but steady wins, that's how you build lasting wealth. So embrace the boring. Laugh at the flashy traders who chase the next big thing and lose everything. Be the tortoise, not the hare. Why consistency builds confidence. Ever notice how your confidence wavers wildly when you have a string of losses? Consistency smooths out those emotional spikes. When you trade consistently, you know you're playing the long game. You don't put all your emotional eggs in one basket. Your confidence isn't a roller coaster, it's a steady, reliable friend. And confidence is huge in trading because it keeps you calm and focused when the market gets wild. Handling slumps, the ultimate test. Even the most consistent traders hit slumps. Sometimes your setups won't work for weeks. Sometimes your risk management will be tested. Sometimes the market will look like it's actively trying to destroy your account. That's when consistency really matters. If you freak out, abandon your plan, or chase losses, you're toast. If you stick to your plan, manage risk, and keep showing up, you survive. And surviving slumps is what separates pros from amateurs. Tracking your consistency. How do you know if you're truly consistent? You track it. Keep a trading journal. Log your trades, your emotions, your adherence to the plan. Look for patterns. Are you skipping rules? Overtrading on Fridays? Letting losses run? Tracking shines a light on blind spots and helps you course correct before small issues become big problems. The compound effect of consistency. Consistency compounds over time. Small good habits lead to big results. Show up every day, follow your rules, manage risk, and the results will multiply. Think of it like brushing your teeth. You don't see instant results, but over time, you avoid cavities and keep a healthy smile. Trading consistency works the same way. Humor break. The consistent trader starter pack. If you want to be a consistent trader, here's what you'll need. An endless supply of coffee because routines don't sleep. A trading journal thicker than a phone book. The ability to say no to every shiny setup. Patience to watch your friends blow up accounts with flashy trades. A love for boring charts and steady growth. Not glamorous? Nope. Effective? Absolutely. The myth of overnight success. The media loves stories about overnight millionaires. You know the type. How I made $1 million in 30 days trading crypto. Spoiler alert, most of those stories leave out the years of losing, testing, and grinding behind the scenes. Trading success is usually slow, steady, and silent. It's about building skill, discipline, and consistency. You don't need to be a superstar. You need to be steady. Consistency is freedom. Here's a powerful way to look at consistency. It's freedom. The freedom to not panic. The freedom to say no to bad trades. The freedom to survive losing streaks. The freedom to build wealth without stress. Consistency isn't boring, it's empowering.
Chapter 11. Protect your mind, protect your capital. If trading were just about charts and numbers, this book could be half as long and twice as boring. But here's the truth. Your biggest asset isn't your laptop, your broker account, or your fancy indicator. It's your mind. Protect your mind, and you protect your capital. Ignore your mental health, and you might as well pour your money down the drain. Burnout kills more traders than bad strategies, poor risk management, or volatile markets combined. The mental game in trading isn't just a side hustle, it's the foundation. So, buckle up. We're diving into why taking care of your brain is the most profitable thing you'll ever do. The silent killer, burnout. Burnout is sneaky. It creeps in when you least expect it. You start trading like a champ. Early mornings, late nights, analyzing charts, tweaking your setups, the adrenaline pumps, the screens light up, and you feel unstoppable. Then slowly, the passion fades, the focus slips,
the energy drains. You find yourself staring blankly at charts, making impulsive decisions, chasing losses, and feeling like you're stuck in a hamster wheel that's spinning way too fast. That, my friend, is burnout knocking on your door. Burnout doesn't care how smart you are or how good your strategy is. It will steal your edge, wreck your discipline, and devour your confidence. Why burnout happens to traders? Trading is mentally taxing. You're constantly evaluating risk, managing emotions, and making split-second decisions that impact your bank account. Add in the 24/7 nature of some markets, the pressure to keep up with breaking news, and the endless stream of social media gurus telling you to hustle harder, and you have a recipe for exhaustion. Many traders fall into the trap of treating trading like a full-time obsession, not a sustainable lifestyle. They skip meals, lose sleep, and isolate themselves. The result? Mental fatigue and poor decisions that lead to big losses. Trading is a marathon, not a sprint. This is a cliché, but it's cliché for a reason. Treat trading like a marathon, not a sprint. It's about pacing yourself for the long haul. Imagine trying to sprint 26 miles. You'd collapse somewhere around mile 3. But if you set a steady pace, hydrate, and take breaks, you'll cross the finish line. Trading success works the same way. How mental fatigue leads to bad trades. Ever made a dumb trade after a long day? Yeah, me too. Mental fatigue clouds judgment, impairs focus, and makes you more prone to emotional reactions. When tired, you might chase after a must-win trades, ignore your stop losses, overtrade to make up for earlier mistakes, freeze and miss good setups. Fatigue turns even the best trader into a gambler. Creating a trading lifestyle, not an obsession. The key to protecting your mind is balance. Trading shouldn't consume your life. You shouldn't miss family dinners, skip workouts, or lose sleep because you're glued to the screen. Create a lifestyle where trading is a part of your day, but not your entire day. Schedule breaks, set clear work hours, build in time for hobbies, exercise, and social life. The power of routine and boundaries. Boundaries aren't just for your inbox or social media, they're essential in trading too. Set strict times when you trade. Avoid checking charts obsessively outside those hours. Create routines to start and end your trading day. Review your journal, set goals, then step away. Boundaries help your brain reset and reduce stress. Mindfulness and trading. Mindfulness might sound like a yoga retreat thing, but it's a powerful tool for traders. Being present and aware helps you notice when emotions spike, when focus fades, and when impulsive decisions are creeping in. Even 5 minutes of mindful breathing before trading can boost clarity and calmness. Sleep, your secret trading weapon. You can have all the indicators in the world, but if you're running on 3 hours of sleep, you're handicapped. Sleep restores brain function, improves memory, and sharpens decision-making. Trading tired is like driving a Ferrari blindfolded. Make sleep a non-negotiable part of your trading plan. Exercise and nutrition, fuel for the brain. Your brain runs on fuel, and no, that fuel isn't just coffee and energy drinks. Regular exercise boosts mood, energy, and cognitive function. Eating nutritious meals helps keep blood sugar steady, preventing those nasty trading crashes where your mind feels foggy and distracted. Treat your body like a temple, not a snack bar. The social side of trading. Trading can be lonely. Staring at screens all day isn't exactly a social butterfly's dream, but isolation can worsen mental health and cloud judgment. Build a support system, trading groups, mentors, friends who get the grind. Talking through wins and losses helps normalize the emotional roller coaster. Managing stress and anxiety. Stress is inevitable in trading, but unmanaged stress is a fast track to disaster. Find healthy outlets, meditation, journaling, hobbies. Learn to recognize anxiety creeping in, sweaty palms, racing heart, restless thoughts, and take action before it hijacks your trades. When to step back. Sometimes the best trade is no trade. If you're exhausted, emotionally drained, or just not feeling it, take a break. Walk away from the screen, recharge, and come back fresh. Traders who respect their mental limits avoid costly mistakes and trade longer. Humor break. The over-trading zombie. Ever feel like a zombie clicking buy and sell without thinking? That's your brain screaming for a break. If you catch yourself turning into a trading zombie, it's time to unplug, stretch, and maybe call a friend before you lose your shirt. Mental health is the ultimate edge. Most traders obsess over indicators, charts, and software, but the biggest edge you can have is a healthy mind. Clear thinking, emotional stability, and mental resilience turn average traders into great ones. Don't overlook this critical part of your trading toolkit.
Chapter 12. Build a system, then trust it. If trading were a movie, this chapter would be the grand finale where the hero finally stops improvising and becomes a disciplined champion. Because here's the ultimate truth in trading. You don't win by guessing, hoping, or chasing every shiny indicator. You win by building a solid system and, crucially, trusting it through thick and thin. The last law of trading is deceptively simple and brutally hard to master. System plus discipline equals freedom. Sounds like a math problem, right? But it's really the core to turning your trading from a nerve-wracking gamble into a smooth, reliable income source. Let's break down how to build your system and then trust it so deeply that emotion, fear, and second-guessing don't stand a chance. Why most traders fail? No system, no trust. Ask any struggling trader what their biggest problem is, and 9 times out of 10, you'll get something like, I don't know when to enter or exit. I get scared and close too early. I chase trades and blow up. I have no consistency. The common thread? They don't have a system they trust. Trading without a system is like trying to build IKEA furniture without instructions. You end up with a wobbly chair and a headache. When you don't have clear rules for entry, exit, risk, and management, your brain fills the void with fear and greed. 2 terrible bosses to work for. What is a trading system? A trading system is simply a set of repeatable rules and processes that tell you exactly what to do, when to do it, and how to manage your trades. That's it. The beauty is, once built, your system becomes your trusted roadmap. You don't need to guess or react emotionally. You follow the rules. How to build your system. Building a system isn't about finding the perfect indicator or the holy grail. It's about designing a method that fits your personality, lifestyle, and market. Start simple. Pick a time frame. Pick a strategy. Trend following, breakout, mean reversion, whatever suits you. Define clear entry and exit signals. Decide how much you'll risk per trade. Then test it. Backtest, forward test, demo trade. Refine as you go. It's like training a puppy. Consistent, patient, and loving practice turns chaos into obedience. The magic happens when you trust it. Trusting your system is the secret sauce that separates the winners from the wannabe winners. Here's a little secret. Every system will lose sometimes. Every system will have drawdowns. Every system will disappoint you at some point. The question is, do you stick to it or do you bail the moment it falters? Trusting your system means following your rules even when your gut screams to bail. It means not tweaking your system on every loss. It means having faith in your process through ups and downs. That's tough, but it's the only way to build long-term success. Discipline, the hardest part. You might build the best system in the world, but without discipline, it's useless. Discipline is showing up, following your plan, managing your risk, and controlling emotions. Trading is a mental game disguised as a numbers game. Your brain will fight you every step of the way, especially when you're losing or bored. Discipline is the muscle you need to train every day. How to build discipline. Discipline isn't some magical trait you're born with. It's a habit. Start small. Set clear rules for yourself. For example, only take trades that meet my exact criteria. Never risk more than 1% per trade. Always use a stop loss. Then stick to those rules. Celebrate when you follow the plan. Reflect when you don't. Over time, this builds ironclad discipline. The role of journaling. If trust and discipline are the backbone, journaling is the brain. A trading journal helps you track every trade, emotion, and decision. It shines a light on where you're sticking to your system and where you're sneaking out the back door. Journaling turns subjective feelings into objective data. It's like having a coach on your shoulder whispering, "Hey, you missed your stop-loss rule again." When to tweak your system. One trap many traders fall into is constant tweaking. Every loss becomes a reason to improve the system. Every win a sign it's perfect. The truth is, most systems need minor adjustments, but frequent changes destroy trust. Only tweak when you've tested extensively and found consistent flaws. Market conditions change dramatically. You have a clear data-backed reason. Don't tweak because you're bored or scared. The emotional roller coaster. Without a trusted system, trading is an emotional roller coaster. Fear, greed, excitement, despair, repeat. With a trusted system, those emotional ups and downs flatten out. You gain confidence. You stop second-guessing. You don't need to check your account every 5 minutes. You trade with the system, not against it. Humor break. The system digger syndrome. Ever know someone who changes their trading system every week? They start with a moving average crossover, then jump to RSI, then to Bollinger Bands, then to some secret indicator only their dog understands. That's the system digger, always searching for the perfect magic trick instead of building trust. Don't be that trader. Your system is your business. Think of your trading system like a business. You invest time and money. You build processes. You measure performance. You adapt based on feedback. Treat it professionally, and it will reward you. The freedom of a trusted system. Once you trust your system, something magical happens. Trading stops being stressful. You don't fear losing trades because you know they're part of the process. You don't chase shiny setups because you know what you're looking for. You gain freedom. Freedom from doubt, fear, and chaos. How to deepen your trust. Trust grows with experience. The more trades you take following your system, the more data you collect. When you see your system produce consistent results, even with losses, you believe it. Patience is key. The power of routine. A trusted system thrives on routine. Review your trades daily. Plan your trades before the session. Keep your environment distraction-free. Routine supports discipline and trust.